Good day, traders. This is Chris from tradesight, and I wanted to talk about something that we call a trade within a trade here at tradesight. It's when we have a pattern set up and then a similar or better pattern set up on a smaller time frame that gives us the opportunity for an early entry in a stock that can then lead to less of a problem when you've got the actual trigger in terms of risk versus reward. Let's take a look at what I mean by that. Here's a look at the MXIM, MXIM. This is on the daily chart. We're looking for a breakout here on this stock over $33.78 coming into Thursday, the 22nd of May, 2014. So it's basically a new high breakout. The stock's been going sideways now for about 2 months, and looks like a real interesting setup to break out over that level. Now, let's drop down to the 15-minute time frame as we start the session. This is what it looks like. A couple things I want to point out. First of all, back on Monday, the stock had a fairly strong day on good volume, and that's what's leading us up towards the new high on the daily chart. We had a 13 Comer sell signal on the 15-minute time frame right at the close on Monday, and that stopped the stock for a short while, about a day and a half, 2 days. That is exactly the high over those 2 days. So the 13 signal gives us exactly what we should have expected to the bar, literally stop the stock in its tracks. Now you've got a risk line from that. That's basically the area where, for those that would take a short on the 13, they would cover their short if it got above that risk line. Now, in this case, the 13 actually did play out over 2 days, so there's no reason really for anybody to still be short this stock off the signal. But having said that, that level is still fairly important. What's even more important, though, is just with this opening bar. Remember, the trigger on the daily time frame is $33.78. Just with this opening bar, you can see that we've set the high of that 13, and basically we've got a 2-day base formation or a cup formation, depending on how you look at it. So remember, if our main trigger is $33.78, and right here we've got a new trigger intraday over this high, about $33.55, and it's a nice base cup by itself. What you can do, knowing that you've got the bigger trigger above, is you can take a small size entry here, maybe a quarter of your normal size, maybe a half if you want to be a little aggressive, and do this with the intent of adding to the trade on the main daily chart trigger. And I'm going to move the stock forward bar by bar from here and walk you through what that looks like. So we'd be entering the stock here for quarter size, half size, something smaller than your total trade size. And watch how this thing plays out. It starts to head up. Okay. Gets right to that risk line. And that's initially a pause point, but not much of one. Now we've triggered. Remember, 33.78 was the actual trigger on the daily chart. So what you've got here now is, as you take the rest of your trade size, you've actually got a lower cost basis on the trade than you were originally planning on. In other words, if we're going to buy over 33.78, maybe we get in at 33.80. But here, by taking quarter or half size down at 33.55, it gives you a much lower cost basis. So that makes it easier to manage the trade from what should be the main move, which is the trigger here off of this 33.78. And as you can see, it starts to work. So whatever happens to the trade from here, that early entry, because we saw a pattern within a pattern, gives you a better risk reward analysis. It gives you a lower cost basis, which makes actually managing the trade a lot easier. Have a good trading day.